All right, folks, welcome to a weekly market recap. This week, I ended up on a negative 1 hour week, actually negative 2 hour week. One of our trade was on Monday. Second trade was on Thursday, which went through a loss, which ended up on a negative 2 hour week. We did have set up the day before that. That setup, it was a break even day because we made money back. And yeah, so we ended up on a negative 2 hour week. You see, we've been making a lot of errors. I've been in a drawdown. I've had a 16 losing streak right now, and it's all part of the process. Everybody's gonna face a lot of losses, right? But after a losing streak, where are you? Right? Where is your? How much are you down? I'm only down about 5% with a 16 losing streak. It's called having risk management, right? Without risk management, it's nothing, right? So I decrease risk after every losing trade, right? After every losing trade, I decrease risk by half, right? Until I get to 0.25% risk. From there, I go on a huge losing streak, but guess what? For a four losing streak is gonna make me lose 1% only, right? So I only lost 5%. Probably not even 5%. I think it's around 4.5% to 5%, but it's madness. After 16 losing streak, that right there is still keeping me alive. And I'm still up a lot. And that is just keeping me safe from going very deep drawdown. But it's just the operator error. I'm making a lot of mistakes here, but I don't feel no emotions, right? I'm controlling my emotions. I am literally not letting anything slide, right? I'm controlling everything, not letting myself not letting myself get too emotional about being in a 16 losing streak. I know, like a lot of people, if you get in a 16 losing streak, it's gonna hit you hard, right? It's gonna be like, damn, what the fuck, right? But it's all part of the process here. I know that in the future I won't be having a 16 losing streak. It's just that if you go realistically, a losing streak is when you follow your trading guideline rules, when you follow your everything, and if you lose in a probability way where you have no operator errors, and if you go to lose streak, that's an actual lose streak, right? Because the 16 lose streak I have are not a actual lose streak because all of them there was a operator error. I made a mistake, which we have to learn from and keep on going forward from there. But this week we had a setup on Monday, set up on Tuesday, which we took on the next day after that on Wednesday. We had a setup on Thursday, Friday. We didn't have a setup, but I didn't execute it because of time. It got tapped. It didn't get tapped the right time. And if Thursday goes, and if the Friday trick goes back down and still respects the range and it goes back up to that entry, I'm not gonna take it because the only way I can execute a double purge is if my entry doesn't get tapped. And if my entry doesn't get tapped, and there's a double purge, push out the low, push the high, then it gets tapped again, then I can take the short to the downside. But the trade must be alive to the next day. It's not alive to the next day. If you have it the same day, push out the high, push out the low, and it goes back to my entry, I can't take it because it needs to be alive to the next day. That will determine the time if it really shows a really strong sign you actually want to hold. So Monday, we had a mistake here. There was no valid high, the CRT high. So that was the whole reason why we lost. If you go back to the Friday trade, this was a double purge, right? You can see the double purge. The Russian block never got tapped, so I thought we were valid, and we made some bullshit rule on Friday. We said the only time we could bypass the valid high, valid low rule, it was during the specific scenario, but it became false. Why? Because it got stopped out, right? And this is not only one trade. I tested more trades, and the overall the bypassing the high value rule was not going to work, right? Simply wasn't going to work. It did give us a positive 4RR, but it overall went to a loss, so we couldn't even keep the 4RR. So that's what happened. And we go back here. There was no valid high. That's the 8:45 a.m. high. That's a 5 a.m. high as well. And even the 5-minute time, this is near corrosive profile too. Even the 5-minute time frame is not that high, so I wasn't looking for that. There was no valid high there, so I was looking for this Satake repurchase, which we did have a double purchase here, but as I said, you can't bypass the valid high value rule. So this trade is inevitably gonna go in. This trade is inevitably going to go in a loss over the long term. And the lesson of Monday is to always look for valid high, valid low. Doesn't matter if it's double purchase. Doesn't matter if there's whatever. There must always be valid high, valid low. If there's not a valid high, valid low, we look for the high to get purchased. Looking for a valid high, valid low to get formed. Looking for the valid high, valid low to get purchased. Why do I say this? What do you mean? Guys, you probably wondering, what is valid high, valid low, right? Did you make this up? This is made up through me actually consistently seeing in the market. Valid high, valid low basically is a actual high and an actual low, right? A valid high is bullish bearish candle, bearish bullish candle. As you guys know, a swing low, a swing high takes out liquidity. It's just a bullish bearish candle, right? It's just a bullish candle and a bearish candle. They don't have enough resting liquidity. Equal highs, equal lows don't have, if they're like equal to a digit, don't have enough resting liquidity because a portion of them gets stopped out because the body is resting liquidity as well as the wick. If it's right over there, right on the wick, right a little above it, there's resting liquidity, so nobody got stopped out. So there's not enough liquidity. A that have a little bullish bearish candle or a bearish bullish candle, they have legit resting liquidity, right? So without it getting purged, without having equal high, equal lows, without having failure swings, etc., etc. So that's lesson of Monday, is to always look for that high, that low. If you don't have that high, that low, look for a repurchase, look for the right model one, then look for the additional block entry. And one last thing I gotta say, and what I like this scenario, the reason I bypassed it because I made a bullshit theory on Friday, as well as like this is a double purge. I've never faced this problem because I was looking back on this trade. We go back on the higher time frame. I was looking back on this specific trade, determined to go up to upside or not. So that's because in this case there was a double purge as well. But in this case, the double purge was a valid low there. In this case, it had a valid low, valid high. So it didn't work out. And the other thing is that double purges, double purges, CRTs, they're the same thing. They're at the end of the day, they're fucking ranges. So I have to pay attention to the ranges as well, a lot. And that's the next lesson. So going over to Tuesday, we took this is Tuesday, right? We didn't take no trade on Tuesday. We took no trades on Tuesday because this setup right over here. You can see we had a setup right down here in the 5-minute time frame. There was a setup for to take on the 5-minute because he was at 3 a.m. offers the right model one. So I was going to take that setup, but there was a time where my entry was, go back in time. My entry was right on the where was that at? Was it this candle? Because my entry was somewhere on the premium side. Oh no, I was looking at the wrong side. Right around here. So my entry was right on our premium, so I couldn't take it, right? You can see how market constantly does the same pattern over and over. This is the 5-minute time frame. But if you go to the higher time frame, you could see the same thing like this on the higher time frame, hourly, 4-hour, daily, weekly. They all work the same way. They all work the same way. You can see before the market did drone located, what does the market do? Consolidates, generates a fake low to catch people off guard. Same thing over here. Generates fake low before people are catching people off guard, right? If you go back in a higher time frame, same thing here. Right? Or what's the perfect perfect scenario? Fake high consolidates before taking up the high, right? So this happened. The same thing happens on a 4-hour. The same thing happens on the hourly, right? And the best way to actually back test is taking the 5-minute and the 1 minute, and that 1 minute's too far. But 5-minute, 15-minute hourly is the best time for to actually back test, right? Because every time frame moves the same. And if your 5-minute time frame, if you could catch a specific pattern, it can happen in the higher time frame. When the higher time frame comes around and it happens the same type of pattern, guess what? You can take advantage. You know what's highly to happen. You know what's highly to anticipate to happen, right? So on Friday, Tuesday I did have a setup, but I didn't take it because the portion of the setup where I entered was on premium. As you guys know, only time you only buy in premium is when the discount gets tapped. The discount didn't get tapped, as well as there's a portion of my trade on a premium I can't take it. Second is that I always want to buy deep retracement, sell deep retracement. I always want to buy low, sell high. I never want to buy high, sell low. I always want to buy in discount, sell in premium. I only want to buy in premium when discount gets tapped. I only want to sell in discount once the premium area gets tapped. Otherwise, I cannot take a trade. But that was the lesson of Tuesday. The next lesson of the next lesson of the day was on Friday, and I did take another setup right on this. It was a 15-minute model one. There's a 15-minute model one. I took a threshold long, and there was an OTE, but I did not hold it all the way because that one broke my trading guideline rules. There's a big lesson on Wednesday. So on Wednesday, the market context narrative was all bullish or overall. We did have this 4-hour SMT CRT where this candle's low. So at the time of me recording this, it was a SMT right here with this low. At the time I was trading, So it was SMT. I was like, okay, I'm gonna long this up just out of the 4-hour SMT CRT original block long without waiting for the confirmation, without waiting for the 15-minute model one and the original block after the model one confirmation. I was like, okay, I'm just gonna long it up because my rule says at that time to long it up, but that rule doesn't really work out in my favor in the long term because I went back in my trades again. I said, okay, every time I had an SMT, market did offer me the 4-hour SMT CRT of the. So this is the kind of having SMT with. Every time that it worked, when you had SMT, market gave us that model one confirmation over there. Market tapped the original block of the 4-hour CRT we're having with SMT we're having with of the 4-hour CRT, and it worked out in our favor, right? But what the market did, what the market tend to do is give us the model confirmation and retap the original block entry went up higher. So it regardless would have got into the trade. But there was times where the market straightly, the SMT didn't hold and just straightly went down and made us lose. So I would rather take the one where I have confirmation and I enter the same trade and don't miss a setup and take it rather than try to be determined and have more losses, right? And guess what? And I'm still going to, if it works out, I'm still going to take the same trade, right? And if it doesn't work out, I'm not going to have no losses. So the lesson of Tuesday is 2 lessons here. Lesson number 1 is I will no longer enter on SMT CRT trades on the registration block. So this is how we're having 4-hour SMT CRT with this candle. That you pushed it out, well, you did not. As well as as I said, I was going to enter on the registration block of the 4-hour CRT SMT. So I was trying to be determined that trade, which didn't work out. You see, failed. So the lesson is, that's lesson number 1, which is I no longer enter on SMT CRT's registration block. I wait for a model confirmation. After model confirmation, then I look for the registration block entry to long it up or short it down. So that's lesson number 1 of the Tuesday. Why? Once again, why do I do this? Because I backtested it and I saw if the SMT doesn't hold and I take a trade, I'm just gonna lose, regardless, right? If the SMT holds, I'm gonna have one confirmation and I'm still gonna be able to, I'm still gonna have the opportunity to be able to participate on the move without missing it. And so since if it doesn't hold, it goes down and distributed as low. And guess what? When it distributed low, I get stopped out. Or the high, I get stopped out, right? So I'm just making unnecessary losses when I could have just waited for a confirmation and still participated in the move. So that's the lesson of Tuesday. So I no longer enter on 4-hour SMT CRT original blocks. I wait for a model confirmation and wait for the original block entry. Otherwise, I'll take no trade. And the next lesson is the next lesson of the day is I cannot take more than 1 trade a day, regardless of the outcome, regardless if I make a mistake or not, regardless if I make a operator error. I cannot take more than 1 trade per day. Why? If I take more than one trade per day, what's going to likely happen? I'm going to lose more than I'm supposed to be losing. Instead of me being down 4.5% to 5%, I'm going to be down what? 6%, 8%, that's unnecessary. That is just gonna give me Jordan even deeper. And I don't even think I'm down 4.5%. I'm probably down like 4% because 16 after the eighth loss in a low, I'm down negative 2%. Add another 4 RR, I'm down what? Add another negative 4 RR loss, I'm down negative 4 RR, right? That's right, that's 12. Right? So now I'm down 4 RR and add up another 4 RR, then eventually probably down somewhere. I'm down somewhere around 4 to 5%, right? And that's very respectable after having a 15 losing streak, 16 losing streak, I mean. So 8 plus 4, 12 plus 4 is 16. And I'm down only what? I'm only down 5%, somewhere around there, because it's currently fluctuating around there. So I don't check it unless I'm trading. So that's the lesson of Tuesday, to only take one trade a day, regardless of the outcome, regardless of the if I take a trade or not. Because on Tuesday I made this loss back with a small gain, which which did hit take profit, which is a fixed 4 RR. But that's not for my trading ground rules. And the next lesson of Tuesday as well is tomorrow, always that in that time frame I'm trading 15-minute or 5-minute, I must always mark out the OTE, because when I don't mark out the OTE, usually if the market pulls back down to my entry multiple times, it will actually cause me to have emotion. If I mark out the OTE, all I know, okay, it's gonna happen because this OTE is gonna be a deep retracement. So it made sense to push all the way back down to accumulate new orders and scare away other traders. Because what happened on Tuesday on my other trade, when I didn't mark out the OTE, the market fucked around here a lot, and guess what happened? I got out of trade. But the trade made me, maybe make this loss back, but I got the trade, which is not, you shouldn't be doing, right? And I should have probably taken even a more than one trade a day. But this next lesson. Next lesson is to always mark out OT to avoid psychology problems, because OT is a mechanical thing where it's gonna happen. It's gonna be just a deep retracement back down to your entry, because my entry is OT, my stop is total soup, my take profit is total soup, breaking the scam, right? Because when the market goes back to your entry more than multiple times, you just deep OTE, right? It's just OTE. OTE basically means deep retracement to accumulate new orders, scare away all traders who are right to catch the move, and take them out by making them second guess, by making them be impatient, etc., to get them out of the move, right? Which that's what happened to me. They made me impatient and they made me second guess, and eventually deliver. So that was a lesson of the Wednesday. So always mark out OTE. Always look for, what can I say next? Always look for SMT. Okay. Always mark out OTE. There's one more lesson. What's the next lesson? That was all, right? So always mark out OT. That's the lesson of Tuesday. And keep in mind, Tuesday, my bias was wrong. I'm supposed to be bearish, because what happened on Monday was SMT IRL to ERL, and the ERL got tapped. So now we go from a ERL to IRL, right? So from a ERL back to, hey, it's a long time. Oh, this is never gonna end. So we went from a ERL, SMT IRL back to ERL. For now, we're gonna go from back to ERL back to IRL, which is low down here, Y down here, and not as fair value gap, because fair value gap is inside of CRT, so it's gonna get invalidated. So on Tuesday, the next lesson is my bias was wrong. On Wednesday, I mean, my bias was wrong. So I'm supposed to be bearish right after Monday. So right after Monday, I'm supposed to be bearish for the whole week. So Tuesday, I'm supposed to be bearish. Wednesday, I'm supposed to be bearish. Thursday, I'm supposed to be bearish. That's when NFP came back bearish. And on Friday, I was bearish. So after having 3 days of wrong bias, I was eventually to be bearish, because what I did on the whole week was that I was like, I'm gonna be bullish. I'm gonna be I'm gonna long it up until I see a bearish candle. But it doesn't work like that, right? Because market could go from market to go from period to period, right? So all we gotta do, look back in the chart, all scale all the way back here, and look for the ERL. Mark it out. So now we go from a daily ERL back to IRL, etc. Because daily IRL, the IRL to ERL, the ranges, the CRT, and the daily ranges are literally one of my most important concepts, and the market profiling are one of my most important concepts that ever, because market profiling from the order flow, the CRTs are ranges, IR to ERLs is, same thing, because when the market goes from IR to ERL, on the IRL, it does a range. So if the range low, goes up higher to ERL, etc., etc. So that's what's very important. So the lesson of the whole week, from Tuesday all to Friday, is I cannot make a BS theory. I must always pay attention to ERL to IRL, IR to ERL, CRT, and market profiling, because they're my most important concepts of my trading, because those right there determine my bias. They affect my bias a lot, and most of the time, the IR to ERL, CRT, and market profiling tells my drawn liquidity 90% of the time, or almost 100% of the time, with the daily ranges, with the equilibrium, etc., right? So that's the lesson of the other week anniversary of the whole trading. So I cannot make BS theory. I must always pay attention to IRTRL, and I cannot dish it out. That's the next lesson. So yeah, and that at the time I learned that lesson was on the Thursday trade, which I took at a loss, which we can talk about it right now as well. So now move on to Thursday. I was bullish again, which I'm supposed to be bearish. That's why it became out bearish. So those are lesson of the day. So the lesson is the same thing, but with the extra lesson here. So on Thursday, same concept upside. The concept doesn't really matter, because the context could be the concept doesn't really matter if your box is wrong, right? So on this is Thursday, right? On Thursday, we had a long. We took this long, and there's a lesson, right? We had two big ranges, right? Range, smaller range, and one thing I was going to talk about right when we go to lower time frame. On the lower time frame, on the big range, we had a valid low, right? On the smaller range, we did not have a valid low. So that means that there's not a valid low. So that means when this low gets purged, I'm going to take a repurged. And that's what I did not know, because I thought, okay, I was fine. Take a trade to the upside just from the resistance block, because we are right on the we're right on the bigger range, right? Right on it, right? So it's literally, you're going to make another low with a bigger range. But keep in mind, the smaller range is the one we care about, because the smaller range gives us the execution, which matters. And the bigger range gives us a target, right? Bigger range is the target, smaller range is execution. So the smaller range is the one that we care about the most, because it's the execution. That's what we're going to trade to participate into this potential move, right? So that was the lesson of Tuesday. The next lesson is the same thing as daily IR to ARL. We must pay attention to IR to ARL. I must always mark out IR to ARL. That's lesson number one of the Thursday trade is I must always mark out the IR to ARL. I cannot forget it, because it's one of my most important concepts that determine my drawn liquidity. The next lesson is that they must always be VAT high, VAT low. Since I already talked about this on the Tuesday trade, and that there must be VAT high, VAT low. On the Monday trade, I mean, there must be VAT high, VAT low. But this is a new scenario type of a trade. Right? In this case, we had a big range, a small range, and we were right on the bigger range. So I was like, okay, the bigger range has a VAT low, and we just literally right on the bigger range. So I think we're valid to take a trade, but I think it's not a thing you should be saying. So eventually failed. So the lesson of the Thursday is, I'm gonna get out my rules real quick. Let me go read it out. I literally set it on my rules. Right over here. Let me go read out the trading calendar rules for this Thursday trade. Let me right over here. It says as well. The next lesson is to never know your bias, because what I thought is like I was trying to prove somebody. I was trying to prove somebody. I was trying to prove myself right. And the next lesson of the Tuesday trade as the Thursday trade as well is that I never marry my bias. I never try to prove something. I always observe and follow the market makers, right? Because on this trade, I had another problem, which I was trying to be right. I was trying to prove something, right? There's literally nothing to prove. Who was I trying to prove something to, right? I was trying to prove something to somebody else, which is not valid, right? So that's the next lesson as well we're going to talk about right now. So before I do that, let me go read out the actual lesson of this day, just down over here. So when I have a big range and a small range, when I use a small range execution and use a big range as a target, the small range must have that high better low. If it does not have a that high better low, I wait for a repurge. And the small range is what I care about the most, because that is the range I'm using to execute. Doesn't matter if the big range is right, buy it. Right when the market makes a smaller range, that's when I care about the smaller range more than bigger range. When the bigger range is impacted / having SMT, so the only time I care about smaller range is when the bigger range has impact in the market. So basically, either having a soup of it or having SMT. Just because you have a soup. Otherwise, I take no trade, because I use a smaller range as an execution and the bigger range as a target. So the target is less important than the execution, because the execution is how we get in. The target can be the same over here, but if the target could still be over here, right? But if the execution is not there, you're not going to be able to participate. And if you're wrong in the execution, it could eventually go here, but execution matters more, right? Because execution is how you actually make money, right? Simple as that. So that's the next lesson. So we only care with a smaller range. So right when it's a bigger range and a smaller range, right when market has a big range and a small range, I care with the small range more, because I'm using a small range to target to the bigger range. So the small range is more important than the bigger range, because the smaller range is the execution range. I'm using to execute, and the smaller range must have that high at a low. If it does not have a that high at a low, I'll look for a repurge. And that's the next lesson. Same lesson on Monday. And the next lesson is that I never marry my bias. I have nothing to prove. I always observe and follow the market makers, nothing else. I never ever marry my bias, because what I'm trying to prove is I was trying to prove my bias, my theory, right? I was trying to prove that, market wants to go up higher. I was trying to prove like, okay, it's going to go up higher because there's no ERL here. I was like, market is going to go to this ERL without me noticing that the market already went to ERL. So now we're going to IR, which is all down here. That's a lesson of Thursday. So that's the next lesson. The next lesson is of the day is to always pay attention to ERL to IRL, IRL to ERL, because that is the concept that determines my draw liquidity 90% of the time with the CRT and the market profiling. And that's the next lesson of that day of Thursday. So I must always mark out ERL to ERL. If I don't see the ERL being around where the currently market is at, I have to look back in the chart and see what's the ERL at. So that's the lesson of Thursday. So now going to Friday, was a pretty chill day here. So we had a 4-hour level, which is this 4-hour number one, as well as we had a bearish order flow. We were in premium, so when I sell off as well, we tapped the premium area, so I'm gonna go discount as well in premium. So I'm gonna go do range low. We had all the market class and narrative. We're looking for a new profile 2, and the new profile 2, the 8 a.m. candle was all down here. So we're not looking for the advanced entry, because for the new profile 2, for the advanced entry, the 8 a.m. must be the high or low of the 5 a.m. In this case, it's the low, but we're looking for it to be the high. It's because we're looking for that to get purged to go down lower. So that was a lesson of that was not a lesson, by the way. That was the, why we didn't look for the advanced entry. So on the 4 hour time frame, we had our 4 big range, four big ranges right over here. So right on the next day, I paid attention to IRL to ERL, ERL to IRL, as well as I paid attention to the smaller range importance. So this is our big range. But if you pay attention to it very hard, our biggest range is this candle. This is the 4 hour CRT is our biggest range. So that's what we care about. But since that big range had SMT with this range, and this range high never got purged with EU, I'm looking for a smaller range, right? So this, when the market went all the way here, I didn't really care about this. I cared about this smaller range, right? So we had a big range, bigger smaller range, bigger smaller range, no range, but this is a smaller range. This is the smallest range we have. This is the range we're using to execute. So our 4 kilos is basket liquidity as well as this for our model 1. So going down to a lower time frame, looking at the smaller range we have, I was looking at the smaller range high. A smaller range high, there was a VAD high. So looking for the VAD high to get purged. We had the right time to purge between 6 a.m. to 10:30 a.m. as well as we had the right number 1, as well as we tapped the resistance block, but the resistance block got tapped beyond the 11 a.m. And the only time I bypass my time is if it's a deep OTE 0.86 on the 4 hour time frame, or if it's a New York, or if it's a London session move, or if it's a double purge, and the double purge must last to the next day. The double purge resistance block shouldn't get tapped until the next day. So if we're looking to take the trade the next, in the upcoming week, I cannot take it short. Why? Because the resistance block already got tapped. So for a double purge, it needs to go purge out the high. She did. Purge out the low. The next day comes around, purge out the top of the high of the resistance block, and go down lower. Then I could take it. Otherwise, if he taps the high, if he pushes out the high, if the market confirmation taps it, the resistance block goes down lower, and this goes down. He goes back up higher. Again, I can't take it because the resistance block already got tapped, and the take profit of it already got tapped. So there's literally no reason for us to get into the trade anymore, because there's no more trade there to be taken, because the take profit already got met. And the only time we can take the trade still when the market does here and does a double purge is if the resistance block doesn't get tapped, then we can take it short or up or long it up. So that's a lesson on Friday. Lesson on Friday is that we followed all of our rules throughout the whole week. That we made it a operator error, and that's the lesson of the week. Thank you for watching. Beautiful week. Guess what? Even with a 16 losing streak, guess how much I'm down? Only 5%. Risk management is key to becoming profitable. And like, I faced a lot of drawdown. I faced a lot of losses. But every time I have a good trade, I usually add on risk. Right? So let's just say I'm down 5%, and I'm supposed to risk 0.5%. And I have a setup that targets the higher time drawn liquidity, which is whenever I have a setup that targets the higher time drawn liquidity, which is the weekly time frame, I consider it a high probability. So when the short-term drawn liquidity aligns with the long-term drawn liquidity, I consider it to be a very high probability, and that setup must happen between Monday to Wednesday. Then even if I'm supposed to risk 0.5% risk, I'm gonna risk 1%. So then eventually make everything back, right, with one single trade and profits, instead of being risking 0.25% and making, most of them back and possibly going to break even, because low to risk, high to reward, and the low to risk, high to reward gives a lot of RR. So yeah, that's a lesson, and you have to go around this. You have to have your own type of system, right? And this is what my system says. That's the whole lesson of the week. Thank you for watching. If you guys like, comment, share. Join us down below, and I'll see you guys later. Peace out. Join our Discord. Peace.